He's back, ladies and gentlemen. And it's at a very interesting time in the market. We've been floating around this $1 trillion level for a number of weeks now. However, year-to-date numbers were up 32%, which shows me that we are a long ways away from last summer's madness. Last June, we lost $200 billion in a matter of weeks. This was obviously due to the collapse of everything: FTX, Celsius, Voyager, Terra Luna, you remember. Conditions are nowhere near the same. However, the numbers are indicating that we could be trending in a similar direction. But here's the good news. For the last 3 years, July has been in the green. Last year, it sparked a small relief rally after all of that chaos. In 2021, it triggered the reversal that sent us into the cycle top for that November. And in 2020, pretty much started the bull run. All 3 years were preceded by a red June. Now, to those who say past performance is not an indicator of future results, I have to say this: numbers don't lie. Plus, July is my birth month, so I might be a bit biased here. Bitcoin's resting on 25K, calming before the storm in my opinion. This is keeping the rest of the market flat. XRP dipped below 50 cents. I think we were expecting a bit more from those emails. XLM and XDC, similar story. Things are pretty quiet. However, for XDC, I have noticed a sustained level of volume ever since that SBI VC trade deal. Remember, XDC was added to their exchange, so over time, that extra liquidity should reflect quite nicely in XDC's price. Even though numbers aren't the prettiest, there is still progress being made, and I'm here to tell you about it. You're watching DHN. Let's talk crypto. Let's start with the latest. The Central Bank of Colombia and their Ministry for Information Communication Technology stated in a press release that they would be using Ripple's central bank digital currency platform for pilot testing in the coming weeks. Ripple's CBDC platform does make use of the XRP ledger, so whatever testing would be taking place would be appearing on chain. Now, this isn't an official CBDC launch on the ledger. According to James Wallace, Vice President for Central Bank Digital Currency Relations for Ripple, he stated that these pilots would go towards reinforcing Colombia's instant payment system. Now, I like this development for 2 reasons. One, this isn't the first time that Colombia and Ripple have worked well together. Last year, Colombia decided to use the XRP ledger for verification of property rights. Secondly, Colombia is just north of Brazil. Brazil uses an instant payment system known as PIX. Colombia has been vying since 2020 to be a part of this brand new instant payment system that Brazil wants to spread throughout Latin America. If they're choosing Ripple, then you can pretty much go ahead and guess that they will be using the XRP ledger as a bargaining chip to incorporate into the system. Either way, this is big news for XRP. Next, let's move to a story that broke in the wee hours of the morning. The Bank for International Settlements has selected the Quant network for a massive central bank digital currency project. Project Rosaline, which is stemming from the London Innovation Hub, has selected Quant and UST, not Terra, to provide APIs, and Quant serving as the base blockchain layer. Now, in the episode for March 20 in relation to ISO, I made a point to stress the importance of application programming interfaces. The Bank for International Settlements just confirmed the discussion that we had, ladies and gentlemen. They state the project has proven that APIs could play a key role in enabling central bank digital currency systems to deliver a range of benefits in terms of payment functionality and security. So, if you're in the payments market for crypto and you're looking into a project and they don't have a focus on APIs, you can dump that bag right there because they are behind the trend. But now, let's talk about Mr. Larry Fink. BlackRock has just sent in the paperwork to the SEC for a spot Bitcoin ETF. This is the one we have been waiting for. I remember hearing about this for the first time in 2020, and since then, Grayscale has tried, Van Eck has tried, and WisdomTree have tried. But they are not BlackRock. 10 trillion in assets under management. When they say jump, people often ask, how high? But perhaps more interesting is the fact that this spot Bitcoin ETF will solely be focused on Bitcoin, and the custodian is going to be Coinbase. That's a bold move. It almost appears as though they chose Coinbase intentionally. It also makes sense now, all of the relations and meetings that they had last year between BlackRock and Coinbase. Out of all of the other entities that have tried to put this forward, BlackRock could do it, and they could do it pretty quickly. Sticking with the SEC for a second, it appears that we were on to something, ladies and gentlemen. Word has come out of a digital asset securities exchange that is registered with the SEC. Upon initial reaction, people are very speculative. But what did we discuss on Wednesday's episode? 20 plus exchanges, 15 plus custodians, 26 issuance platforms, and another 15 service providers. So, just wait till they get a load of the other 19. People are already making connections to Anchorage Digital, another SEC registered custodian. But here's my thing. I feel this could be a signal. We don't have anything concrete coming out of this just yet. But if word begins to spread about the SEC's secret network of securities exchanges, we could see a tide shift in the market very soon. So a couple days back, Democratic Representative Richie Torres questioned CEO of Circle Jeremy Allaire and Coy Garrison, former SEC official, about the SEC's recent actions against Coinbase. It's a short clip, but some of the points that were made, I think you are going to agree with. Take a listen.
There are crypto companies like Circle that strive to be compliant with the law, and then there are crypto companies that seem intent on willfully evading the law. And yet Mr. Gensler appears to see no difference at all between the two. He treats them all as one and the same. His enforcement has been indiscriminate in nature, which brings me to the lawsuit against Coinbase. Mr. Garrison, if the SEC sincerely thought that Coinbase was operating an unregistered securities exchange, then why on earth would the SEC approve Coinbase as a public company? Or why would the SEC not at a minimum require Coinbase to disclose its status as an unregistered securities exchange as a material risk to the investing public? Do you see a contradiction between the SEC's 2021 approval of Coinbase as a public company and the 2023 enforcement action against Coinbase?
I do see a contradiction. As part of the filing review process, taking a filing effective under the securities rules requires a public interest finding. Typically, a public interest finding, it's a very loosely defined term, but you might argue that a act by the company that is inconsistent with securities laws, what might be not in the public interest.
And I want to interject, the SEC made the following statement in the Coinbase lawsuit. It said, declaring effective a Form S-1 registration statement does not constitute an SEC staff opinion on or an endorsement of the legality of an issuer's underlying business. So when it comes to S-1 registration, the SEC is asserting that it has no opinion on whether an issuer is complying with the very laws that the SEC is charged with enforcing. That strikes me as strange. It's almost as if, suppose the SEC would approve the mafia as a public company and then say, but we have no opinion on the underlying legality of the business. As a layperson, that just strikes me as absurd. So who among us should get to decide the future of emerging technologies like crypto and blockchain? Should it be Chair Gary Gensler, an unelected bureaucrat who answers only to himself? Or should it be the United States Congress, whose members are elected by and therefore accountable to the people? And so, Mr. Allaire, do you believe, as I do, that an act of Congress would be the most democratic means by which to decide the future of digital assets?
Thank you for the question, Congressman Torres. I do agree, and in fact, the Presidential Working Group specifically asked Congress to act urgently on this matter over a year and a half ago. And so I believe it's critical that Congress does take ball control here.
So I want to ask you all the same question, and I'm going to be thinking on this as well. Is it going to take an act from Congress in order for us to see some change? Or will it require a grassroots movement from people just like me and you in order to make things change? I also want to take this opportunity to address a question that we got in the comments for Wednesday's episode about which cryptos have already been deemed a commodity. Well, see, the thing is, we don't have a lot to work with. We only have what the CFTC has referenced in other suits related to other projects. For example, recently, everybody's going after Binance, and in one of those suits that were filed, the CFTC mentioned Bitcoin, Ethereum, Litecoin, Paxos issued stablecoins, and BUSD. Now, that is the only place, the only instance where we have it written about how the CFTC feels about certain projects. It was a great question, though. And I think at some point in the future, we are going to see a bit of a split. So I want to encourage more questions down in the comments because I want to use them for a community post segment in future episodes. So again, I appreciate you for that. But now it's time to talk hustle. 60-second hustle. This is a segment where I talk about a project that I am watching that I think you should look out for, and I do it in 60 seconds. So the project I have for you is called Stacks. Stacks is a smart contract layer for the Bitcoin network. Stacks is to Bitcoin what Polygon is to Ethereum. However, Stacks can make use of the $500 billion in liquidity thanks to the Bitcoin network. They plan on using this liquidity for everything from NFTs to cross-border payments. This is a smart buy because there are only a handful of projects that can bring this functionality to Bitcoin. But here's the cherry for your sundae. In 2019, Blockstack, the company responsible for the issuance of Stacks, initially issued the token through the Securities and Exchange Commission. This is a registered token offering which allows Stacks to operate with full compliancy in the United States. So what you have here is an SEC registered asset ready to bring massive Bitcoin adoption to the United States. I will be preparing a video around Stacks so that way we stay informed. But that's all for this one. Like I mentioned, leave any questions you may have down in the comments. I look forward to using them in future community post segments. It's just a great way for us to engage with each other and learn from each other. Also, if you found value in today's episode, there are a few things that I need you to do for your boy. Hit that like, subscribe, ring the notification bell so that way you don't miss the next episode. And as always, I want you to have a great day, have a prosperous day, and most importantly, tell your friends, if that money is digital, so is the hustle. I'm Wade Teamer, and I'll see you in the next episode.